My name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So, today I wanted to talk about some tips when dealing with the IRS and payment plans. So, if you are constantly owing the IRS taxes, I know many business owners are, but to balance between cash flow, keeping business afloat, and you still got to pay taxes. So I know sometimes it's not necessarily the priority to pay off your taxes. So here's a couple of tips that you can do just to keep the IRS at bay. You obviously want to pay off as much as you can, as fast as you can. But I usually will have a lot of clients that wind up in predicaments where they're constantly owing. So here's some tips you can take a look at and consider to manage your IRS debt. Right. So the first thing is one of the things that my clients a lot. So if you enter into a payment plan with the IRS, at least with plans, most of your common plans, assuming that you owe less than 50K or so, you can make a payment plan lasting up to 6 years to pay off your balance. So what I do a lot with my clients is I have them make the payment plan 6 years. And the IRS will agree to it as long as the payments that you propose will take care of the balance within 6 years. So for example, if you have a $50,000 debt, obviously they won't accept the plan that you're going to pay $50 a month because you won't be paying that 50,000 over 6 years. It will take you a lot longer to pay that amount. And keep in mind that penalties and interest are still accruing while you're in the payment plan. So the balance still continues to go up as you pay. But as long as you propose a payment that will take care of the balance in 6 years, you're good to go. So a simple formula I do is we take the dollar amount, divide that by 72, and that's roughly the lowest amount that the IRS will accept for the payment plan. So we usually go that route, take the lowest possible plan to pay, but the idea is that you should be making payments way more than that. And the idea is that we keep the amount that the IRS is looking for at bay. So if you have a fluctuating cash flow where you have some months you do a lot better than others, as long as you have this minimum payment for months that you are low, you can go ahead and just make that minimum. Those months that you're low on cash, you can go ahead and make those minimum payments. And then the months that you're okay, you can make increased payments. So that's one thing that we do. Make the obligation as low as possible, but we always look to pay more what the payment plan calls for. That's one way to keep things at bay. Another thing is start to pay on your own. One thing that I've seen is that sometimes the IRS will take a while to get back to you as far as approving a payment plan, whether it be approving a payment plan or you're going ahead and you're filing returns. Sometimes they take quite a while to process. And in the meantime, there's no need to wait until you hear back from the IRS. So if you know that you're going to owe the IRS, one way to get a jump on it is to go ahead and make payments prior to hearing back from them. You don't need to wait for them. And the good thing is that if you're going ahead and you're making payments before they process it, you can pay whatever amount that you want, but you're continuing to knock it down until they process it. Now, it won't be necessarily that long because on average, let's say if you process a return and they know that you owe, you'll probably hear from them within about 4 weeks. I would say 4 to 6 weeks before you get an approval on a plan. And that's if you do it by mail. You can also get a payment plan done online as well. But if you're doing it on mail, expect to hear about 4 to 6 weeks for an approval. But don't wait. Go ahead and pay what you can while you're waiting, because they can come back to you, reject the payment plan, but in the meantime, you're still getting credits. And if you have to redo the plan, you're knocking down that balance. So that minimum payment can become lower and lower over time. Another is if you think you can pay your bill within 4 months, then I wouldn't bother with a payment plan. Because with payment plans, keep in mind, there is a fee to have a payment plan. Now it's pretty nominal. I think it's anywhere between $100 or $65 to $100. I think 65 if you do it online. Don't quote me on this exactly, but I think it's $100 or so, a little over 100 if you do it over the phone. So you're encouraged to file it online, but nonetheless, there is a fee. Point being is that there is a fee. If it's something that you think you can take care of within 4 months, then just take the 4 months and pay it off. But again, don't wait to hear from them. If you already know internally you can pay it within the 4 months, just set aside the money and make those payments within the 4 months. Don't bother getting into a payment plan. By the time they start trying to reach out to you to see what's going on, you would have already paid it off. So again, this is assuming you have no other debt. So just 4 months or less, you plan on paying it off, go ahead and pay it. it's going to be longer than that, then go ahead and set up a payment plan. Next thing is, if you are in a payment plan, don't skip payments. That can void your payment plan. That kind of hits back to my original point, was try to keep the mandatory payments as low as possible so that you're in a better position to not skip the payment. So whatever payment plan that you set up, make sure that you'll really be able to swing the payment. Because if you set up the plan and you skip payments, your payment plan will default and the IRS will start to come after you for the full amount. Make sure it's a payment you can handle and stick to what it is that you need to pay. If you do owe over a certain amount, you don't really have much of a choice. They do an automatic payment. I think if you owe more than 25K, then they do an automatic withdrawal. So you don't have much saving with that. But if you owe less than that, you can choose to pay on your own. So if you do pay on your own, then make sure you're staying on top of that. All right. And the last tip is you always want to stay up to date with filing. So you do get some leeway as far as with timing, as far as filing returns. But if you are in a payment plan, you must stay up to date with your filing. If the IRS deems you out of compliance with filing, that can be another reason to avoid your agreement. But even if you owe, because I know many business owners in this position where they know they're going to owe, but they already have a payment plan. So you can only have one payment plan. What you can do in that instance, if you know that you're going to owe and you already have a payment plan, you can always just roll that next year's taxes that you're going to owe into your current payment plan, as long as you stay under that threshold, mostly for the 50K. If you owe more than that, then they may have a larger conversation with you. But as long as you stay under that 50K mark, you should be able to roll over any taxes that you still owe into your current plan. So don't use that as an excuse not to file a return. All right. So there's some tips you can use to keep the IRS at bay. So that's all for now. Hopefully this was helpful. So if you have any more questions about this topic or any other tax or account related questions, feel free to reach out. I'm happy to help. All right. That's all for now. And I'll talk to you soon.